I think what's happening in real time are the advisors at these investment banks are really catching up on the fundamentals of Bitcoin and disseminating the information properly to their clients. What I'm talking about is the halving. So I think this halving event that's coming up for Bitcoin at the protocol lever, it's going to drive flows, and I think it's going to come from, interestingly enough, like the family offices.
GM, everybody. I'm the host of Coin and Zach Guzman, coming to you live from our Brooklyn studio here in New York City as Bitcoin bounces back above $70,000 a coin as I return from Brazil. Good to be back alongside the head writer here at Coinage, Andre Bagansky here. Andre, it's like nothing changed since I left. We're basically where we were.
Yeah, if you look at Bitcoin up 10% over the past week, it is a little misleading. Doesn't feel that way, you know. Back up to 70K, shaking off those ETF outflows, Zach, but glad to have you back.
Yeah, it's good to be back. And obviously, even though the price really hasn't gone anywhere, there are, of course, a bunch of headlines to get to, whether it's Do Kwon's trial beginning in New York, which I was at yesterday, of course, SBF sentencing coming up on Thursday, and then just a bunch of ETF flows that seem to be swinging things around and still leading price.
Yep, and we've got some news regarding Binance and the executives over there in Africa. We've also got some news involving the SEC and Ethereum, a possible investigation there, which has startled markets a little bit, Zach, in my opinion. But we're going to dig into that later, and we're also going to have on John Devine later from Blockfills, head of OTC trading, to talk to us about OTC markets, Zach, a little bit less transparent than our blockchain-based exchanges. So I'm really excited about that one.
Yeah, all these worlds of TradFi and crypto converging as we have been discussing through and through, whether it's fund flows, which we'll get into all that in a sec. But why don't we start with the update that we got? I was there for day one of the opening statements, the trial that's expected the last 2 weeks between the SEC, Do Kwon, and Terraform Labs. This is a civil trial, Andre, so not exactly, I think, the courtroom wasn't as packed as SBF's criminal trial, but nonetheless, it's a huge one that was garnering a lot of interest on Twitter as I was kind of sharing what was going on in the courtroom. A jury of 9 New Yorkers going to decide the fate of whether or not fraud was committed by Do Kwon and Terraform Labs. So day one and today's day two of that trial, and we'll be covering it, as always, at coinage.media. But Andre, I mean, this is a huge story, and this is one that the SEC clearly, I mean, that courtroom was filled, packed with not press. Press wasn't there, really, aside from me, but suits. The SEC, the DOJ, everyone was there, and Terraform had lawyers representing not just the company, but also Do Kwon as this got kicked off.
You know, you and I were together at the SBF trial, and it was the definition of a media circus. I think I counted maybe like 70 journalists trying to get into the courtroom at one point. But I recall you saying that you were one of the only reporters there. I mean, walk me through what that experience is like. I think you said there were parallels to the SBF trial too, in terms of the SEC trying to boil this case down. Would love to hear your thoughts on that.
Yeah, I mean, you know, obviously the sexiness of the SBF trial was there because of, you know, it had Super Bowl commercials, it had celebrities. Terraform was really, honestly, Do, which is not surprising considering the fact that the SEC is going after both him personally and the company for what transpired in that collapse. But it does always surprise me. The media attention around Terraform weirdly isn't there, despite the fact that it's arguably, I think, the more interesting story, because it comes down to where do you draw the line on failure in trying to build a technology and fraud? And that's essentially the two-pronged thesis. So this is where the similarities, I think, exist in terms of the opening statements from the SEC saying, look, this isn't a case about cryptocurrency. It's a case about fraud. It was almost 100% copied from the way that the SBF trial went, was just remove the technology and the idea of crypto, because the jury is not going to understand it. Not a single one of those jurors has touched cryptocurrency.
Maybe one potential juror, right? You talked about one that was dismissed that spent thousands of dollars on Bitcoin and Ethereum. Openly said that in the courtroom. Quick way to get yourself thrown out of any crypto court case.
Well, I don't know. Have you done jury duty, by the way?
I have not done.
Okay, neither have I. Okay. And it's because no one wants to do jury duty. So everyone's trying to get tossed. And sure enough, you had this guy say, yeah, I've bought Bitcoin and Ethereum. And then the SEC, you don't know which side dismisses jurors, but that one probably was a huge red flag for them.
But a little bit more focus, Zach, in terms of what's at the question here is, I believe you said that it is the SEC is trying to prove that, one, Terraform Labs and Do Kwon made misrepresentations about how Terra's stablecoin maintained its peg. and at the same time, misrepresentations over chai. Can you fill me in on that? Because I'm not as familiar with chai.
Yeah, there's two prongs to this. As I said, you got one in terms of it all comes down to misrepresentation. By the way, if no one's watched our exclusive interview with Do Kwon, it was the first interview we did after the Terra collapse in 2022, when $40 billion essentially was wiped out. And this entire fraud case comes down to, were the risks misrepresented? That's always basically what happens, is if the truth is not what you're publicly sharing with everyone. And in this case, the SEC is really digging into the sister company of Terra, which is Chai, which was more run by Do Kwon's co-founder at Terra, Daniel Shin. And the whole idea is that it's Korean PayPal, essentially. And they were saying, look, we're using the Terra blockchain to settle these payments. To this day, which I think is interesting, because you heard it in the opening statement from the defense, they have been pretty consistent in saying, no, Chai did, in fact, use the Terra blockchain. As we discussed in our interview with Do, there was at some point, though, where that changed. And that's where you start to get into how hard will the SEC push this, and will the jury believe that that itself is fraud? I will point out, though, Andre, that a lot of this is not as juicy and or sexy as all of the kind of claims that existed back in 2022. If you recall, people were saying Do Kwon stole money, that he embezzled all these things, that it was very kind of similar to what we saw in accusations against SBF that became definitely true as that trial went on. Here, though, the SEC is really sticking to a kind of watered down piece of fraud, which is you oversold the project in one specific instance, which is that enough for a civil case? Maybe. Would it be enough for the DOJ to go after him for criminal charges? Not that by itself, I don't think, but they can try it. And then the other piece is around Jump Crypto, which, again, I also think is kind of soft, in that they're basically saying the first time UST pegged, Jump Crypto actually injected a bunch of money, which is a huge trading firm, to buy up UST and restore the peg, where Terra was basically saying our algorithm worked as intended, the technology works as intended, which, again, gets into how much of this is fraud versus kind of marketing to project that the project is doing what it's always said it wanted to do. And again, a lot of this is markets. It's less to do with the technology and more to do with markets, I think, in the way that, the defense opened with any government can peg their currency to the dollar. Of course, we've seen, developing countries do that in the past. Sometimes it doesn't work out. Sometimes the peg breaks and a lot of people are hurt. Is that fraud when the governments do it? No. Can it be fraud when a private company markets their stablecoin as stable? That's what we're going to find out in this 2-week trial. And so I think that that's why it's a bit more interesting than maybe cut and dry, and certainly less juicy than what we learned at the SBF trial, you and I listening and seeing that they spent money, company funds, bribing officials, and then also on, I think it was Thai hookers to maybe get accounts unfrozen. I don't think that much is going to come out of this trial, but it is going to be interesting to think about, where do you draw the line on failure in tech, and when does it become fraud?
Yeah, no co-conspirators or former lovers testifying against Do Kwon, as far as I'm aware.
No.
But, meanwhile, we've just got a quick headline here that Do Kwon was released from prison as well. In terms of what happened this weekend, it seemed that his extradition was pretty locked up in terms of him going to South Korea to face criminal charges there. But the country's top prosecutor asked the Supreme Court to intervene in that country, and he was released. People may not remember, but he was arrested pretty much nearly a year ago. So spending a year in terms of Montenegro prison, and
people are saying he looks good too. I don't know if you saw this.
You know what? I wanted to mention that, but at the same time, they were saying that prison's good for looks. So,
I mean, it was the case for SBF. People said the same thing for him. We'll see him on Thursday at the sentencing.
He did have that glow up.
So we'll see. I mean, I don't know. I haven't had time to work out either. I don't really know. I think there's probably more efficient ways to go about a body change than full blown getting arrested, but
sure. But the Supreme Court's going to issue a decision on which country he's extradited to, and we don't have a timeline yet. So
no, it has been a huge back and forth there. It's honestly been quite annoying as a journalist to follow, is what exactly is going on in Montenegro, and no one really knows. My gut says, obviously, he would prefer, I think, to go to South Korea rather than the U.S., because then he would be charged here and charged there. Whereas if it's South Korea, I think it would just be one go. But we'll follow it. We'll continue to track it at Coinage.media. We'll be at the courtroom. I'll be doing this daily. We'll do recap videos. We'll do tweet threads. We'll do it all. It's been good. Elsewhere, though, I mean, obviously it's not just Terra that the SEC is focused on. Also, the bigger players still in the space, Ethereum, and this is news that I missed when I was out, but still really beating the drum on ETH being a security potential.
Potentially. And we're going to jump into that in a moment. But first, we're going to talk about Blackrock. Obviously, one of the big players in terms of Bitcoin ETFs. Everybody likes to talk about Blackrock, but showing a little love to Ethereum, Zach, in terms of coming out with their BUIDL fund, which was launched on the Ethereum network. And for people who are involved in crypto, at a first glance, this just looks like a dollar yielding stablecoin in terms of how it's set up. It's essentially a fund where tokens are used as digital representations for shares in this, and they partnered with the firm Securitize as their tokenization platform and transfer agent, while BNY Mellon acts as its custodian. And when we talk about tokenization, Zach, it can sometimes be these lofty, ephemeral things that executives like to talk about. But this is so significant, in my opinion, because it's BlackRock actually pioneering and experimenting with the tech.
Mm-hmm. Yeah, no, I mean, I think, we've already seen BlackRock dip a toe and then now kind of double down on this idea of what they want to do in crypto, right? And they're now essentially blowing up when it comes to the Bitcoin ETF, which we'll get into the fund flows in a sec. But in general, I think it's an interesting thing because I don't know how you can have the TradFi giants not just double, but triple down now outside of just Bitcoin on the rest of crypto. And granted, they're not throwing their funds into meme coins yet, and I don't think they will. But at least for Bitcoin and now Ethereum, that type of defense and support, I think, is pretty key when you think about how hard the SEC is now trying to fight back on letting crypto get any wins outside of Bitcoin.
Yeah, and I mean, that brings us to the SEC probing companies in an Ethereum investigation. According to Fortune, we had reporting last week that talked about a canary being removed from the Ethereum Foundation's GitHub page, and it was actually removed on February 26th. So like a month ago, and people are just waking up to this now in terms of this sort of signaling that the Ethereum Foundation could be under investigation in some capacity or responding to inquiries. There are, sources out there or reports out there that say, this is not necessarily indicative of an investigation, but Fortune coming right out and just saying that the SEC is using the merge as a new pretext in order to try to reclassify or classify Ethereum as a security and not a commodity, which is a big headache for people involved in crypto, Zach. And not good for these ETF odds either.
No, I mean, it's fair to say that I don't know where you fall on this now, but I have to just flash back to kind of the idea of when we chatted with the Bloomberg boys about odds for the ETH approval in late May.
Yeah.
Basically, I think everyone now is in the camp that that's not happening.
Or pessimistic.
Definitely not happening come late May. And earlier this year, a lot of people were basically above a coin flip. And certainly now I think consensus far below. So I think that it's happening in real time, but the SEC doesn't seem to be engaging in the way that a lot of people hoped.
Yeah, and companies interviewed for this, did not want to go on the record and sort of name themselves. And one source did describe Gary Gensler as vindictive as a reason why, which is not necessarily a good look for a disclosure-based regime per se.
Does that surprise anybody though? I don't think that's really that surprising. I mean, you think about everything that he's done since, right? It's like all the appearances that he's gone on and said, like, we approve Bitcoin as an ETF, but that doesn't mean we're going to approve anything else. He's been pretty clear about that.
If you really want to look at Gary Gensler's statements, this whole focus on staking being something that the SEC could potentially be taking a look at. I mean, if you remember Gary Gensler, the SEC has put out these office hour videos where it's Gary Gensler sort of breaking these down, very like flashy, sort of marketed towards young people, in my opinion, is how it comes across. And he did that whole sort of thing that was dedicated to staking, that whole sort of chat and PSA. So I definitely think it's something on the mind at the SEC, but in what capacity, I think, is the biggest question right now. Yeah,
and I also, as we discussed, there's so much there are a lot of other things happening in the Ethereum ecosystem to where like the ETF was never going to be, I think, the big thing anyways. I know, a lot of people are saying that if it happened on the heels of the Bitcoin ETF and we're still watching fund flows there, that it might not be a positive thing to have it so soon. And so I don't know. I think that it's not the end of the world because we've got this Denkun upgrade we just talked about for 2 weeks. Costs on layer 2s are coming down astronomically. Like there is a lot more, I think, technologically to be excited about in the ETH ecosystem than just simply watching, oh, wow, look at how much TradFi money is coming into Ethereum ETFs now. So like, there is plenty other narrative gas still left in the tank, I think, for ETH and the rest of everything else, so long as we do see building continue. And from where I sit, this is an alpha leak, I think. I'm optimistic in seeing that because as price in Bitcoin goes up, that's where all the interest comes back into the space anyways. And then that's when you have a lot of people within these companies say, hey, look, there might be more things we could be doing in Web3 at the BlackRocks of the world, at the Apollos of the world, at the real world tokenized assets companies of the world, to where I think that a lot of this starts to build on itself. And of course, we've seen that in other cycles
Sure,
before.
I hear you. But with the basic question of whether ETH is a commodity or security looming over everybody's heads in the US markets, that does stifle innovation to an extent. So if you get clarity on that front, you can see what follows. But, one of the things that I have, I'm not sure if we can pull it up. I had a tweet from Matt Hogan on this.
Yeah.
Classic crypto sort of.
Well, that's what I was just saying. It's like, he sits at the crossroads of like TradFi and crypto at Bitwise. We had him on the show.
But
great guy.
The classic crypto trope is people looking at bad news and being like, oh, this is good for crypto. And he's pretty stalwart in terms of saying that. He sort of says that the markets need more time to digest a Bitcoin ETF, which, I guess it makes sense. We had him on the show and he talked about how registered investment advisors are just waking up to these products and that it takes a long time in order for these things to get approved, sometimes months, and,
It does. It all makes sense. And I think, again, Ethereum's always kind of been lost. We had someone from Pantera making the same point that, like, look, you can play Bitcoin through the ETFs now, or you can play everything else. And Ethereum kind of being the, I don't want to call it the ugly stepchild of the crypto space compared to Bitcoin, but a lot more similar in the way that it's looked at from TradFi asset managers, I think. And so it's interesting to think about this cycle where it might get lost, and that was what we heard from Pantera. But alas, we'll put that there for now. We don't talk too much about price. We can skip ahead, though, because we chatted already about BUIDL and what BlackRock's up to. But the other interesting case, kind of, aside from SBF and Do Kwon, isn't even in the U.S. right now. It's in Nigeria, between Binance executives and what's going on in that country. And Andre, you've been watching this one because it's odd. And maybe it's not too odd. Maybe I shouldn't say that because CZ is still locked in the US essentially and can't leave. But same thing playing out with other Binance execs in Africa.
Yeah, a British-Kenyan executive at Binance, Nadeem Anharwalla, has apparently escaped custody in Nigeria. He was arrested or detained on February 26 alongside Tigran Gambarian, who is also an executive at the exchange. And Nigeria has come out with some pretty strong claims in terms of what Binance has done, not only to their currency, the Naira, but also in terms of flows being untraceable and leaving the country. They sort of allege that 26 billion has flowed through Binance from untraceable accounts, sort of out of the country. And at the same time, the Naira is down 70% against the dollar over the past year. And Nigeria accuses Binance of playing some role in that, allegedly by fixing exchange rates. All this sort of boils down to a $10 billion fine that the country wants to extract from Binance, which is more than double what we saw the company pay when they settled charges in November. The court ended up granting them like a 14 days detainment, which has lapsed at this point. And there are sources that have reportedly said like their detention is unlawful at this point. And Gambarian is still in custody, but Anharwalla has escaped, reportedly.
Yeah, it's just so wild to think about that, right?
Yeah, Daniel Kuhn from CoinDesk has an amazing article that I was reading on this, sort of asking the question whether or not the country is strong arming Binance. And he makes the point that it's not wrong to necessarily go after companies that are non-compliant, but, you're impacting people with families at this point. And I think that, that is something that is a little bit shocking about this story to me, is to take a step back and consider the fact that, these people went voluntarily to go meet with the Nigerian government in Abuja, and they're gone, or at least one of them is gone for their families.
I think that this is, again, partially why people don't really want to get involved in crypto, because things like this happen. And you're right. If you're in these countries where a lot of this is wishy-washy, we're going to talk about SBF in a second, but it's very similar sometimes in terms of being in an unregulated space. And when the rubber meets the road,
yes,
I don't know if I'd want to be in some of these other I don't know if I'd want to be anywhere. Here we are in Brooklyn. I don't know if it's any different, man. We've spent most of our time covering cases in courthouses now.
Sure. It's definitely a legal situation that we're going to watch as far as how it develops. Binance has not responded to these new tax charges that were brought against them, but has said that its primary focus remains on the safety of their employees, and they're working collaboratively with Nigerian authorities.
Yeah.
I mean, you've got a British Kenyan sort of resident here. It's fair to ask, or to wonder whether other governments will have to get involved in order to resolve this situation.
Yeah.
But, you know.
No, I mean, it's always raised. It's crazy. But I guess, our big case is about to be completely finished when it comes to what's going on here in the U.S. Of course, Do Kwon we already talked about in terms of what's happening there. And
his civil trial, though.
Yes, his civil trial. But let's shift to the criminal one that is wrapping up when it comes to the other big name in SBF, because that is on Thursday. So we'll look ahead to that. As always, we had our good friend Mark Litt, Bernie Madoff's former prosecutor, on Coinage to chat a little bit about what's to be expected. You and I have already covered the, 40 to 50 years that the sentencing memo laid out. 40 to 50 is a very long time, but maybe not when you consider the 150-year sentence, mostly symbolic, that Bernie Madoff got. Anyways, we chatted with Mark Litt about what he thinks when it comes to what to expect in terms of time in jail SBF will serve, and how different or how similar this is with Bernie Madoff. Take a listen.
It's prompting me back to some of the differences from Madoff and similarities. Look, what Madoff did was over decades. This happened over what, 2 years? Madoff was in his 40s, 50s, 60s when he did what he did. This guy's in his late 20s, early 30s. Madoff had effects on anonymous people all over the world, but a lot of what he did to people that he knew, that he met with, that he lied to their faces about, that he took Elie Wiesel's foundation's money in September or October of 2008. I mean, very personal, almost like mugging somebody.
Mm-hmm.
As far as I'm aware, what Bankman-Fried did was a much more institutional, anonymous, if you will, level. And another difference is nobody stood up and advocated for Bernie Madoff. He had no letters of support.
Mm-hmm.
Nobody came and spoke on his behalf at sentencing. It was him.
Yeah.
At least Sam Bankman-Fried had 10 or 11 people, his parents, others, who stepped forward and tried to paint a picture of the other side of who he is. Bernie Madoff had nobody. Zero.
So interesting thoughts there from Mark Litt, Andre, but I think, I don't know how much letters from his mom or dad is going to sway Judge Kaplan. You were in the courthouse. It didn't really seem that Judge Kaplan enjoyed SBF's presence or anything he had to say very much. And it's going to come down to Judge Kaplan ruling. He can listen to the prosecutors. He can hear 40 to 50 years, but max sentence is 110. And as much as, they've boxed him in and saying, hey, 30 or 40 to 50 years, he could do what he wants here, kind of.
Yeah, my experience from Kaplan is that he is not, he's a tough cookie. He is not soft. And in terms of the strictness and the command of the courtroom, I wonder how that's going to play into all of this. I wonder also, if it's this evasiveness, this apparent evasiveness that Sam Bankman-Fried showed on the stand during his cross-examination that happened later in the trial. For me, that was really impactful to see. And I wonder, if Kaplan's going to sort of, lean into that sort of recognition of, some accountability, some level of accountability. But we have odds from Polymarket that we wanted to throw up on the screen right here in terms of a graphic we've prepared to sort of lay out what people are thinking in terms of the markets. Market's usually pretty good at finding truth in all of this. It seems like a majority are leaning on 20 to 30 years, and that sounds about right. I wouldn't be surprised, Zach, personally. I'd love to hear your takes, but I'm more of in the 10 to 20 years. I know that you focused a lot on Bankman or on Bernie Madoff in this situation, but when I look at sort of contemporary equivalents, Elizabeth Holmes comes to mind for me, and she was sentenced to 11 years and 3 months.
She's also a new mom, though. She's a new mom. She had a baby.
Bankman-Fried's young. He's 32 years old.
Yes.
I mean, if he gets sentenced to 40 years, he's coming out at the age of 72. I mean, he turned 32 just earlier this month.
Fair.
And I don't think, the Madoff prosecutor talks there about the duration. and the length of the scheme. And I think Bernie Madoff, as he mentions, it was a decades-long sort of fraud. And I think when it comes to Bankman-Fried and that shortness, I wonder if there's going to be some recognition there.
There's
where
two things.
Like this kid's life was really just getting started.
I think so. And Mark Litt was saying, look, no prosecutor relishes sentencing. It's not like they enjoy being in the courtroom when they're saying, all right, here's how long this person's going to go to jail. He's like, look, most people who are there watching have never been to jail. And it's not something that, like, you know, it's nice. But at the same time, you're going to have a bunch of victims who are like, yeah, put them. I mean, I think right now on the stream, there's a bunch of people saying lock away and throw away the key. So, like, there's a lot of people who still want that. And justice is always something that needs to be served. But I would agree. I mean, there's two different questions here. It's like, what do you think? And what would you like to see? I mean, you just heard Mark Litt say that he would see 25 to 35 as the camp he's in. So not too far off from the odds we just showed on the screen. I mean, I would agree with you that it's not exactly, and certainly not. I think everyone who's in crypto understands this is not Bernie Madoff part 2. This is not what that was. If you were in the courthouse, if you watched the trial, it's not that. It's a man who is, you know, really doubling down, playing it risky. I think at some point realized, we're kind of screwed here. And it's kind of similar to Do Kwon, by the way, trying to figure out what to do. What are the options on the table in a realistic fashion? But you're also, you know, kind of guilty of putting yourself in that position. So where am I going to fall in this, Andre? I would take, you know, I think 10 to 20 years is just, if you're looking at that chart. When I say 20 to 30, I would say 20 to 30, though, in terms of like where we actually land.
20 to 30. Okay. So yeah, when you look at those 10% odds there, it's sort of implicative of a 10x, you know, so you're looking at a little bit of a 3x for 20 to 30
But it's still crazy to think that 110 is even like kind of what the sentencing guidelines say. Keep in mind also, most of what the FTX estate has said is that everyone's going to get their money back.
I think that is so misleading. You know, it's something that we talk about all the time. Like, yes, they're getting their money back, but they're getting paid out at bankruptcy prices. They're getting paid like $15 for their soul in terms of that bankruptcy claim.
Is that still though in this case? Because I know that it's different between, you know, for BlockFi, that's certainly the case.
In the FTX bankruptcy case, I'm almost certain that it's valued at when FTX filed for bankruptcy.
Yeah, so I think it was Gemini that was the outlier there when they said
we'll give you.
I know, but sometimes if it's actually good, they give you back the crypto at the price that it's currently at, like crypto for crypto, which again is kind of how it should be. But hopefully all of this, we're never dealing with bankruptcy again, is the main issue that I think everyone hopefully takes away from this, is that not a mistake to be repeated. Anyways, we'll be covering it as always. As I said, sentencing's on Thursday, so we'll see what the actual sentence is. We'll have that for you at coinage.media as always. But Andre, why don't we, I mean, we've been talking a lot about these flows. I don't know if we should bring John on who's standing by, or if we just hit the flows real quick.
Let's just hit it real quick.
Okay,
you know,
we'll hit it real quick.
In terms of this week, you know, that we've had over the past week, because for those that, you know, aren't caught up fully, like 2 weeks ago, these ETFs, these spot Bitcoin ETFs that were approved in January, you know, they had their record week, Zach. They pulled in 2.6 billion in terms of net inflows just 2 weeks ago. Yet at the same time, you know, 888 million left the ETFs last week. So kind of pulling back from that, you know, definitely a sign that this is not going to be a straight line up, as Richard Tang, the Binance CEO, mentioned at an event in Thailand with Bitcoin's rise. But, you know, we're looking at IBIT still going strong in its first 50 trading days, you know, not posting any negative flows. Meanwhile, GBTC really was bleeding last week in terms of the amount of money that was flowing out of that ETF. You know, it's something that it looks like Bitcoin has recovered from and shrugged off in terms of the price action, Zach. But, you know, James Butterfield, who put out a report on Monday from CoinShares, said that we believe the recent price correction led to hesitancy from investors, leading to much lower inflows into new ETF issuers in the U.S.
Yeah.
Sort of saying that, you know, that price action, that bleeding from GBTC last week, really startling and slowing the pace of these inflows overall.
Well, let's bring on, I think we should bring on John to get his take on a lot of what we're seeing play out here too, because as we said, it's not just crypto anymore. It's honestly a lot of kind of the intersection of traditional markets and what's happening in crypto. So John Devine, head of OTC trading at Blockfills, joins us now. John, it's good to be chatting with you, man. Thanks for coming on Coinage.
Guys, good morning. I've been listening. You're fantastic. You're covering all the points. It's good to be here.
Thanks, man. Yeah, one of the first questions, I guess, is just building off of what we were chatting about when it comes to flows, what you're seeing play out in, I guess, adoption of Bitcoin right now from TradFi players. What do you make of what we've seen in terms of outflows, inflows, and a large takeaway?
Yeah, so the ETF data is public, and I think you guys nailed your analysis of it, right? GBTC continues to see the outflows. I think that's very expected as there's just a natural rotation from an asset that was trading at a discount to spot for an extended period of time, and that transfer of assets is now moving into these more institutional ETF providers like Blackrock, for example. So we saw a cool off in flows last week, but they've been so strong, and I think what caught me by surprise on these ETFs was the marketing push. I mean, I didn't expect such an aggressive push from a marketing perspective on these ETFs so soon, and it really took me by surprise. I think that's been a massive contributor to this almost FOMO from institutional participants who now have a instrument they feel comfortable with, and they're really willing to allocate assets right away. So I've been pleasantly surprised by the ETF flows.
Hey, John, thanks for mentioning the advertising. The GBTC ads that are ever present on my morning commute are a morning staple at this point. It feels like you can't go to an airport anywhere without seeing a GBTC ad at this point. But, as BlackRock's IBIT fund has really taken off, people focused early on MicroStrategy and BlackRock being one of those flippenings to watch. And MicroStrategy, has lost the lead. BlackRock has pulled ahead. And now people are really focused on this balance between GBTC and IBIT. As of now, in Bitcoin terms, GBTC has 350,000 Bitcoin and IBIT has 238,000. Curious on your thoughts on when we might see that flippening, whether it's a month or a quarter this year, potentially.
If you would have asked me prior to January 11th, when the ETFs were approved, I would have given you a more extended answer. But look, on the back of this marketing campaign, and now I think what's happening in real time are the advisors at these investment banks are really catching up on the fundamentals of Bitcoin and disseminating the information properly to their clients. What I'm talking about is the halving. So I think this halving event that's coming up for Bitcoin at the protocol lever, it's going to drive flows, and I think it's going to come from, interestingly enough, like the family offices. Okay, this is the institutional capital that is traditionally the slowest moving into a new asset class, and they're not going to come in via GBTC. They're going to come in via BlackRock or these other providers. And I think that's going to accelerate as we come into April and as the news on the halving really picks up and the analysts start to talk about it more. I think these flows from family offices and RIAs, which you guys talked about a little bit, this is gonna accelerate that flippening, if you want to call it, so to speak, and it's going to happen sooner than I think we all expect.
Yeah, I was looking back at the big advisor conference down in Miami. We got a video up of the drone show that was there by Grayscale, and it's just like the idea of how long it might take for all of these things to play out when it comes to advisors, as you said, explaining it to normal traditional mom and pop investors and maybe family offices, everything else that's going on there. I am curious to kind of get your take on when you project out for the rest of the year, like how quickly that begins to happen. Because if you believe that we're at 70K on Bitcoin without that boost, I mean, what does the back half of the year look like to you?
Yeah. I've been publicly saying that Bitcoin's got a nice target at 150,000 or 140,000 this year. I'm getting that number really from our prior all-time high, not this 74 that we briefly touched, or 73 and change, but the prior cycle high, which was just about 69,000 and change. So I'm calling for a double of that prior cycle high. I do think we can get there this year if we don't have any type of black swan events in the world, and quite frankly, you turn on your news feed and things are getting a little squirrely. globally. So as long as the environment for investors is relatively comfortable, I think Bitcoin can really accelerate post halving, because the narrative. Look, 21 million Bitcoin. How many millionaires are there in the world? Last time I Googled it, it's like 66 million millionaires in the world. Okay, so not even every millionaire can own a Bitcoin. When you start to talk about the halving and you really wrap your mind around that fixed supply and like true money and also the ancillary aspects of Bitcoin, not your keys, not your coin, that type of stuff, I think that comes back into the conversation, although of course that's not ETF related. But all these things coming together, gold is starting to make some new highs. Like the U.S. government can't stop printing money, and I think more and more people are really waking up to that, especially after this last spending package that just got passed. Bitcoin can run here. I think I'm bullish. Short term, I have to look. Block fills. We're an institutional, over-the-counter, liquidity provider. We serve hedge funds, high net worths, family offices. We serve these types of players in addition to proprietary traders and the like. What we're seeing short term is this Friday is a massive options expiration for Bitcoin. It's the quarterly options expiration, and the 65,000 strike has been the leading open interest contract for Bitcoin options. And why am I talking Bitcoin options? This derivatives market is starting to really impact price and flows. We talk the ETF, which is great as well, but we can't forget about these derivative markets. Goldman Sachs just came out with a note yesterday. They're seeing increased demand from a multitude of their client base. They're even expanding the list of people they're going to start pricing options to. This is a big wake up call, right? It's like, okay, now we have to keep track of ETF flows. We have to keep track of spot, what's happening on the chain, but we can't forget about these derivative markets. They're extremely important, especially for more shorter term price action. So, I wouldn't be surprised if we take a little bit of a breath here based on this Friday's expiration.
Yeah, I wonder when you dig into all of that, right? Like you said, it's not just what's happening on chain anymore. It's also not just happening in the ETFs. It's the derivatives. One of our guests from Pantera actually was laying out that because the Bitcoin ETFs are here now, it's actually sucking a lot of the excitement into Bitcoin. And when we think about Ethereum maybe getting lost in the sauce a little bit, I'm curious if you've seen like any of that happening now when you dig into kind of some of the data you're looking at.
Definitely. So if the best chart to pull up when you want to talk relativity between Bitcoin and Ethereum is the Bitcoin Ethereum spread chart, right? BTC ETH chart, not BTC dollar, not ETH dollar, but BTC ETH, right? And if you look at that chart, it's in a pretty steady downtrend, okay? And we're trading at this level right now that's trying to hold the 2022 lows of this spread. There was a pretty big bid on this spread from these price levels in 2022. But when the market comes back into this level and we kind of chop around it, it's vulnerable. Okay, the Bitcoin Ether spread, Ether Bitcoin spread, however you want to look at it, it can break here. Okay, to the downside. And I think investors, traders are really staring at this chart. If we do start to see it break, you're going to want to be long Bitcoin, short Ether, or on the sideline in dollars to let this market digest. So from a short-term perspective, we're at some vulnerable moments here on that cross. And I think it's, you guys touched on it, right? The consensus generally of an Ether ETF getting approved this year has declined. You look at the odds markets on it. That market is so that there you guys have the chart up in front of you. So now this is the Bitcoin against Ethereum. If this thing breaks above 20, and that's Bitcoin outperforming Ether, the chart doesn't lie, right? And the trend is your friend. So the charts are trying to tell us a story that Ether is not as favorable as Bitcoin right here. Although I am long-term bullish Ether ETFs. I think it does happen. We just have to work through that proof of stake component. How are the ETF providers going to handle the staking aspect of Ethereum? Is there going to be a whole renewed approach from the regulators on Ether being a security or a commodity, even though historically Ether has been called a commodity by the regulatory bodies. That's my take on it.
Really fascinating in terms of you saying that Bitcoin over ETH chart is one of the most important to watch in crypto there, John. In terms of the Ethereum ETF approval odds, a lot of people like to keep track of what these odds are that percolate our Twitter news feeds. One of the things that I like to take a look at sometimes is the Grayscale Ethereum Trust discount to NAV, which we've seen stretch to 20% at this point. It narrowed as low as 8%, 7% this year. I'm curious, do you think that's a valuable chart for people to be looking at? And what other sort of things do you think can help people orient themselves in the market right now in terms of following the important narratives?
Yeah, that's a great perspective. The discount to NAV is certainly interesting to keep an eye on in terms of sentiment of the ETF itself, or the exchange traded product, I should say. But the discount is harder to trade around. If you could pull up you got the chart there. It's a nice chart. Look, here's my problem with the discount to NAV. Bitcoin, traded at a discount to NAV in the Grayscale Trust, and it got to some very significant discounts, right? And that was actually, signaling some lows in the marketplace. So I don't know how quite to digest the discount to NAV here in relation to Ethereum, and that's why I kind of go back to that Bitcoin Ethereum cross, or however you want to play it. Some people look at Ether against Bitcoin. It's either way, it's the same perspective. So I go back to the cross chart. That's what's telling the story to me. I think every trader, even investors who are trying to figure out, allocations to these asset classes, need to look at the relativity between these assets, and the best way to do it is on the spreads.
Yeah, and I think when you take a look at OTC markets, they have this reputation for being a little bit more opaque than, say, your exchanges that, operate on blockchain rails or what have you. And I would love, there's this myth that I see, like, it occasionally will come up, but it's come up after the ETFs, which is OTC desks running out of Bitcoin that they hold on their desks. Can you help unpack this for readers and talk about whether that narrative is true and what it's really getting at here?
Yeah, this is look, at the end of the day, the over-the-counter market is purposefully dark in a sense. These are dark pools, and what I mean by that is it's liquidity. It's buy liquidity and sell liquidity for all these different digital assets, Bitcoin, Ethereum, etc. The purpose of these markets is really to take advantage of not being a public order. So, you try to put yourself in the seat of someone who's placing a large buy order or a large sell order. And if they go to a public exchange, guys like you can digest that public information, and they can identify flows, and they can say, wow, there's some serious selling pressure coming through this exchange, or there's some serious buying pressure coming through this exchange. If I'm a large asset allocator, I'm going to want to enter the markets in stealth mode, so to speak. So what they're doing is they're utilizing dark pools. Blockfills runs one. There's a number of dark pools in the industry, and that's really the purpose of an over the counter market in digital assets is to not be to kind of hide those big orders, right? And we also see it in the options market as well, and in the forward markets too. Now, in terms of OTC desks running out of Bitcoin, that narrative is kind of it's a speculative narrative to add fuel to the bullish fire. I don't think there's a lot of weight to it. There's always a price for an asset, right? If supply gets short, then prices rise because there's demand, and there's always an ask somewhere. There's always an offer somewhere. That's what we're seeing, with elevated prices in Bitcoin, is that supply is backing up, offers are backing up, bids are reaching into the market. But I don't think it's the right thesis to say that OTC desks are running out of Bitcoin, so to speak.
Well, thank you for clarifying that. So it sounds like OTC desks are not going to run out of Bitcoin tomorrow. But before we let you go here, I just wanted to give you the opportunity to sort of briefly say anything else in terms of market analysis and what you think is really catching your curiosity these days. It doesn't have to be Bitcoin or Ethereum. Could potentially be, whatever you want it to be. I think macro, you mentioned squirrely earlier, and that's an interesting word to hear people describe macro markets with. So I'll leave it.
Yeah. Look, I'll start. I'll do 2 points here. So talking Bitcoin and Ethereum, one thing that's being talked about, but maybe not as much, is the forward market and how bullish the forward curve is for Bitcoin. And for any listeners who don't know what I'm talking about, when you talk about Bitcoin prices, the spot price is the price you can buy or sell Bitcoin at today, right? But there's a forward market for these assets, meaning there's a price for Bitcoin to be bought or sold on April 26th or in May or in June, right? The entire calendar. And if you plot the prices of these forward markets on a chart, you get the forward curve, okay? And what we're looking for in terms of understanding market sentiment is the curve in contango, where forward prices are trading above spot prices, or is the curve flat or in backwardation, where forward prices are trading below spot prices? Right now, in the current environment, the curve is extremely contango, meaning forward prices are trading a lot, much higher than spot prices. On an annualized basis, the April forward market is trading about 22-23% annualized over spot, okay? And what this signals to me is there's still a tremendous demand for leverage to be long Bitcoin, okay? And until we see that forward curve kind of cool off and tighten up a little bit and come back into, let's say, like a 10 to 15% annualized return over spot, that I think we're still bullish. And that's another tool that you can add to your arsenal of market analysis is also bringing in the steepness of the forward curve.
Wow. Fascinating, John. Really appreciate it. And definitely want to have you on the show in the future soon to discuss more about macro. For me, you talked about narratives going into this. And I think for me is one of the things that I love in terms of where this narrative ends up is Bitcoin being a zero interest rate phenomena. Sometimes you see skeptics talk about that. And, as we approach new all-time highs with interest rates at 5%, I think that needs its own conversation to really boil down into how that narrative is changing, not amongst the Bitcoiners or the crypto cognoscenti, if you will, but among academia and the way they're looking at this. But then again, thank you for joining the show, and we're excited to have you on in the future, John.
Yeah.
Thank you guys very much. Keep it going. This is fantastic content. I appreciate you guys.
Appreciate it, man. Head of OTC trading at BlockFills, John Devine, joining us there. Appreciate the time, and that will do it for our weekly news recap here, Andre. Mostly because I got to go run back to the courthouse to cover everything for Do Kwon and what's going on in day 2 of the trial. And stay tuned to Coinage.media for all of our coverage there. As always, you can go check out all the top headlines in crypto. We'll do another daily recap. In fact, we'll be doing daily recaps, I think.
I'll be keeping an eye out for your tweet thread, Zach.
We'll just be doing daily recaps all the time at Coinage for what's going on in the courtroom in New York. Sentencing coming Thursday. Go subscribe to our YouTube page if you are not yet. And if you want to co-own Coinage with us and join in the upside, as we have now partnered with Dyke to run our own validators, head to Coinage.media to involve yourself in our project. For Andre, for myself, for everybody here at Coinage, adios. We'll see you again soon.
See you soon, everyone.